What a day. Well, at least December is never boring. It doesn't really look like it was that exciting by the movement, but believe me, it was. Let's get into it. We're going to start small and then we're going to zoom out. And what I mean by that is we're just going to start with this 8:35-minute bar. We know that that data came out. We can see exactly what happened. There's a reason why I tell you every single time, guys, to mark off these bars. I know I sound like a broken record, but you want to know where the high frequency traders are and the algos are. And they give you an exact location on where they're at whenever you have any kind of data that's released. And here it is again, 8:30 data released, PPI, hot as it could possibly come in. We'll get to that in a second here. And what happens? We've just fight it all day. Now, what happens at that 11:30? We all know that you have a bond auction that happens at 11:30. How was that received? Not very well. Then you get into that 1 o'clock time frame today, and what do we have there? We have another bond auction, the 30-year. How was that received? Not very well. The high of this market is 8:30 at the bond auction. That is not a coincidence. There is a reason why I tell you to mark these off. There is a reason why I tell you to watch bond auctions, specifically on days like today. When you have a hot number like that, you want to watch that action. And the hits just kept on rolling today, but there you are at that 1 o'clock level, and you can't get above it. And it's really that wick as well. So it's kind of interesting to watch. And the more you watch this stuff, once you see it, you can't unsee it. It's like taking the red pill. But again, breaks down over and over again until finally end of day. And then it just all falls apart until this evening. And we'll talk about that in a second. But watch how you overlay this with the NASDAQ. And it's so funny, but either when people come in the community or they watch these videos for a period of time, it's like they can't unsee it. But here you are right there at 8:30 again, and you can see same exact thing right here at 11, right into that 11:30 area that marks the high. But wait, there's more. 1 o'clock bond auction on the 30-year. What's it do? Marks the high of the day. You can't make this stuff up. So you're watching these levels over and over again, and then tie this together with what happened yesterday. And you can see right here exactly is Wednesday, 8:30, and that's when that CPI release came out. So did we give a lot back? Not really, and this is where the comparison comes in really handy. When we go and do the same exact thing on the ES, the S&P, look how much further you came down. So what you're always doing is you're always comparing the two indexes, because it'll tell you where you should be playing. So you can see that you broke the 50% line between that soup to nuts move on what? The CPI data? Take a look at the NASDAQ. You can see the NASDAQ 50% level held. Very different than what you saw in the ES. Now you would say to me, well, why do I care about that? You care because if the NASDAQ is going to correlate better and hold up better, that's okay. It's if we lose the NASDAQ, that's when we have into a problem. I'll give you a great example of this. And you can see where we are after hours, and we can all say thank you, AVGO. We'll get to that. It's really important. It's why this video is going out late. When you have a high correlation where the correlation is combined, where they're moving in tandem, you don't really do exceptionally well. So this is the NASDAQ divided by the SPY, and I'm using the ETFs because it's easier. When the SPY is outperforming the NASDAQ, you really don't do very well. This is the SPY outperforming the NASDAQ, right? If this was inversed. So this is the NASDAQ underperforming the SPY. How much money did people make if they had a long bias from November 21 to here? Not a lot. How much money did they make with the outperformance from January 23 into January 24? When you look at that, a lot better. Why? Because the NASDAQ was outperforming. So if you're long, you want the NASDAQ to always be outperforming. So when you have a key event, listen to this part again, please. When you have a key event, you always want to see the underperformance or outperformance of the NASDAQ versus the S&P. It will make your life so easy. You'll see, like, what is the chance of this pullback having a continuation? Is this a real pullback or is this a slight pullback? You can tell the differentiation by determining the difference between which one pulled back more over a key level. Now, please listen to how I said that. I didn't say it from the standpoint of which one's down more, although on a percentage basis, that's an easy way to do it, but from a key area. So when we go and take a look at a key area like the ES, and we take a look at that and go, here, it's back. I'm not gonna have time to edit this. But when you go through this, I'm laughing because I say that so often, someone actually made me a meme. You would look at that ES level and go, okay, well, that's important. But then you would overlay this with other levels. For example, here's Friday's level. And we know that Friday we had big economic data come out. We were all worried about that economic data, right? And then look at how that happened on Friday. NFP coming out. Now you can see how that moved, where we held, where we broke, and you can see the significance of that level today. I can't stress enough, guys, to keep marking these levels off. They are excellent demarcation lines. And it's not kind of crazy to me how that 50% line just fits perfectly in there from that CPI move. Isn't that nuts how that 50% line is exactly where you were on non-farm payrolls? I mean, to the penny. It's crazy. Take a look at this with the NASDAQ. Look at the difference. Look where you are from that date and that time. Isn't that crazy? It's absolutely crazy to me when you look at this stuff and people don't spend the time to try to figure this stuff out, that the non-farm payroll move was actually held. The high end of it was held over the NASDAQ. So if you're playing the game, where are you putting your chips right now? Are you out there buying the industrials, catching falling knives and telling yourself everything's going to be great? It's not going to be great. You got to let it go. Let it go. The weight's too great. Just let it go and let it all come in. And you're seeing that energy, right? 14% or was 14% of the S&P at one point. Not anymore, is it? And we're seeing these things implode. What's working, what's not working. Take a look at the stocks. This is fascinating to me. We're not going up. We're not going down. We just are being, right? It's just present. Okay. It's very in tune with itself. And you can see this. You have the lower, high, low, high, and you're just doing it over and over again, getting tighter and tighter, getting ready for that big move. Now today, is it the AVGO news that's going to do it or not, which we're going to get to. But first, we've really got to talk about why the bond market is doing what it's doing, why they are selling the 10-year, why the 30-year auction was so bad today, why the dollar's doing what it's doing, and why people are blowing out of names like Caterpillar, and why this is probably going to continue for a little bit of time. It's not a bad thing. It's going to present a great opportunity for us, but you need to understand the differentiation between PPI, CPI, and what happened today. Let's do it. So what exactly happened? So this is where we're going to start with it so we can understand. So we have CPI. Now CPI is the Consumer Price Index, and that's what we pay, and that's what's important to understand. Now let me explain why that's important. So here's core, and that's without food and energy. Here's core year over year, and then here's inflation with food and energy. Been a long day, guys. And year over year. Inline, 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 inline. CPI is what we pay. PPI is what they pay. You want to buy a burrito? They need the ingredients. That's PPI. That's what came out today. What's important about this is it affects corporate profit. So there were two things that happened today that really set the bond market off and really hurt these bond auctions today. Let's get to it. So PPI, Producers Price Index. If you want a burrito, you need a tomato, you need some other stuff, you need meat, you need all kinds of things. And that costs money, and that is PPI. So consensus was 0.2. We came in at 0.4. That is double. Now, by double doesn't mean that the cost was double. What it means is the growth was double. So if you were expecting an increase in your bill for that tomato and it was a 2% increase, think of this as saying now you have an annualized 4% increase. And this is simple to figure out, right? If you look right here, you'll see this very, very clearly. You will see that you have this 0.2, 0.2, 4, 4. Times this by 12, times that by 12. Get it? Really important concept, guys. Really important to get this. This is what threw everything off. That would mean you have two things that can happen here. Corporations can either lose money, meaning their profits are going to be down because their costs are going to be up, or they can increase prices. What do you think they're going to do? They will most likely increase prices. If they increase prices, it gets us back to CPI. What does that mean? That means that CPI is going to go up, which would then be inflationary, which would then lead to them not cutting rates because they're repeating the same mistake they made before, just differently. He's special that way. So that's really important concept to get. That is number one. And these numbers, make no bones about it, they were higher. 2.6, 3%. This is what you're seeing. What do you see it in graph form? 3.4, 3.2. Now this is where it gets really tricky because we've talked about how wages are going up, but claims are now going up too. So we were supposed to be at 220. You don't want to see this over at 250. So what's happening? That means more people are filing. More people are filing, which means the Fed's going to want to cut. But if the Fed cuts so that they can spur the jobs market, they're going to increase inflation. They're in a really tough spot here. And that's why you saw the weakness that we saw in the market today. This was pretty much a worst case scenario. You were better off having a hot economy, meaning have PPI come in hot and then have jobless claims come in very low. And you'd be like, oh, well, we have a hot market. Okay. But when claims come in high and costs are up, it throws everything off, because if you cut, when you cut, what's that going to do? It's going to increase the PPI, okay? And it doesn't seem to be having any effect right now on claims. So it's kind of interesting what's going on. It doesn't seem to be having an effect on the claims here right now. Maybe we have to dive into that number a little bit. Maybe there's something with the hurricanes and why that happened. But this is a weekly number. It's not a monthly number. So I'm not really sure about that. You can see the December 7th right there. But take a look at this. Now, I'm a pretty visual guy, and I like looking at things because it just makes it simpler for me. And so if I come here, and I know that's not exact, but just take a look at where you're at. And you have not had this been happening. So in other words, now you're back on that PPI to a level of 3%. You have not seen since 23. Not since this decline, you haven't seen it. So now you can see what's happening. And this is really important because this is how they look at it. They look at it in thirds. Yeah, they look at it quarter by quarter by quarter. That's how they look at this. And so if you took a look at this quarter, you're up. You look at this quarter, you're down. You look at this quarter, you're up, right? And you can see that going up, and that's why they weren't cutting rates before. So this is pretty interesting, and I don't know how he's going to handle this or what they're going to talk about, but next week with the dot plot is certainly going to be something to watch. Really important concept to get, guys, because it really shows how stuck the Fed is. And when in doubt, they're probably going to do less, not more, and let it see how it sorts itself out. Now on Saturday, we're going to cover this in greater detail, but obviously we want to get this out so we're prepped for tomorrow. And what we're looking at here is we're seeing this selling, right? So what's going to happen tomorrow is people are going to position themselves in the option market based upon the data for today for the FOMC next week. The data that came out between CPI and PPI could affect how people put in their dot plot. Probably not going to affect them in regards to what they're going to do right now, but they may change and say, we're going to go out further. We're going to skip January. We're going to skip March. That is very important because this means that you're going to see more pressure here on yields, which means that what you're seeing in the dollar as it's rallying and they're selling bonds is going to baffle people. And what that's going to lead to is just pressure on the industrial names. And that's what you're seeing here. That's the connection. Corporate profits, specifically in the industrial space, is where you're seeing the issue. And that's why you're seeing names today like FTAI that are just imploding. And so you want to just let them implode. Boeing doesn't seem to really be doing its own thing. It's like one of these kids is doing their own thing. But John Deere, you're going to see issues. You're going to want to watch Caterpillar. They're going to have issues. Other sectors are going to have issues for the same reason, but also for different reasons. For example, you're going to see aerospace and defense come in for this reason, but for another one as well. Now, we're going to touch base on this briefly here, but we're going to do this in great detail on Saturday. So you're going to want to watch this. But remember, this happened before, this Doge with Elon and what's going on. This happened during the World War, I think it was World War II. Truman did it. And it does lead to possible deflation or disinflation in certain areas when they find all of the holes and spending. It's not the first time something like this has been done. It happened in World War. And defense is the first thing that gets hit. It's the first one that they go after. And remember, 47% of defense, 47% of all defense spending is discretionary, meaning they don't have to do it. And that's why you're seeing names like Lockheed coming in the way that they're coming in since the election. I mean, it was pretty blatant the way that this thing just got absolutely destroyed right after earnings. It's not a... So when you start to see stuff like this, there's a reason for it. You're going to see it with GD, and these names just got absolutely destroyed, RTX, and it's probably not over, but you probably want to look for some kind of bounce before that. The other side of this that I think is really telling is energy is just absolutely imploding, and we're seeing that when we take the CPI numbers apart piece by piece by piece. Crude oil has no real chance of rallying here with drill baby drill. We're going to watch this come in. Now, right now we're holding these levels, but I do think we have to pay attention to it. As for tomorrow, I think there's some key names that we have to pay attention to, and I'm going to give you 3 that I'll be watching tomorrow. And apologies for how late this went out, but we just got to the point where I needed to listen to this conference call, so let's get to it. So AVGO this evening had what I would refer to as a blockbuster. And what was interesting about it is it didn't look like it at first because there was some misprints out there. It's going to be really interesting when people see some of these headlines and what actually happened, but you'll see the movement. And when you saw the misprint, you're like, oh, well, it really wasn't that great. We saw the movement early, pulls back, rallies, comes right to that breakout level and holds. And what I always tell people with these after hours trades, you always just drop an anchored VWAP off the first move. You can see the break here, and that's when you start going through it, but there was some misprints there apparently. And it's funny how that happens. I'll show you something else that's just absolutely funny that happened. But when you see these kinds of moves, it just presents you an opportunity. There was a buy there. We did it in the community. I'm not going to post them all tonight for a lot of reasons, but we also had calls because we saw something earlier, and I'm going to show you this. A lot of people think that this stuff is like, I'm tinfoil hat, but I'm just going to show you how this works, and you do what you want with it. But what you're seeing here is you're seeing these rallies, these pullbacks, and these rallies. So 210 looks like our key level for tomorrow. Just be aware there were some really big things out there. There was record revenue, record growth, infrastructure and software just absolutely crushed. When they look at the infrastructure software segment, just remember this, they were up 196% year over year. It's a big number. They increased their quarterly dividend. There's a lot in this call to be very, very happy if you're in the semiconductor space. And that's one of the reasons why when you look at SMH tonight, it's doing what it's doing. It's ripping. And you're probably going to see some follow through with NVIDIA, some follow through with the Microns of the world tomorrow based upon this call. Very little for me to say except point at these levels and tell you what's going on and just tell you that this was an absolute blowout. It doesn't look like it at first, but when you got into it, the devil's in the details, and that's why you saw the move. That's why it's probably going to continue to move. But just be aware of this. I think this will have a really great day tomorrow, and you're going to want to watch this. Again, you're going to have crazy options off the open, people trying to position themselves accordingly. You had some shorts out there too on some of these names. I don't know what they're thinking. I really don't know why people short RH. There's an enormous short position out there, and then people just keep doing it, and they keep missing, and then they say we're going to raise guidance. But they never raise guidance. They just miss the raised. It's fascinating because they miss the raised guidance all the time. But they keep raising it, and then the shorts get squeezed. It's the funniest thing, but it is what it is. Let me go through this before I go off on one of my tangents, because I got a couple here I really want to go over with you. But today you'll note a couple things. And the one thing that I pointed out today was this in the community, and this is worth noting. So you will see these games a lot. Bloomberg comes out and says Apple is going to mysteriously stop using their product in their iPhones and come out with their own, quote, sources say. It is not a coincidence that this kind of move happens, and you see this kind of shenanigans, for lack of a better term, right here. Now, when does this happen? Happens at 108. Why does this article come out at 108 on the day with AVGO before earnings? Well, the first thing they do is they wait for the 30-year bond auction to be over, right? That way nothing else can move it but the individual name. So what happens is they get rid of all the other what? What are they getting rid of? All the other variables. People say, well, that's not how this works. Okay, then you live in Candyland. But in reality, what they're doing is getting rid of all the other variables. Out of nowhere, mysteriously, you just see this huge dump. What happens after that dump? Nothing but buying. It was down for all of a sudden, 160 seconds? People are blowing out of it. Apple's never going to use their product again. And down here and in this volume, what did you see for the rest of the day since there? All you had was buying all day, ever since that move. And then you get this after hours. When you see this, they are playing games. It is really important to understand when you see these kinds of moves that day, they are playing games with you. When you understand this, you can play games back. You can take the same trade that they are. Remember, they are the sharks, we are the remora. They have the control, they have the resources, we don't. We are playing against the smartest, most disciplined people in the world. You have to act like it. And not act like, oh, really? Like Bloomberg's doing a great job with this article today. No. It's a plant to shake and bake, and that's exactly what they did. When you know it and see it, you can take advantage of it. To be clear, I had intent to possibly own calls into this because I thought it'd be okay. But once I saw that move, and I'll show you here with the timestamp and the date so you know that I'm actually doing this when I say that I am. Okay, very clearly we bought calls right into it. Because I knew when I saw that, I'm like, oh, they're trying to position themselves. And the other way to know that that's what's doing, so like let's just say that you're not as, I don't know, jaded as I am because you haven't been trading for 25 years, but let's just say you're not. The other flip side of this is, as soon as you start closing above the opening break, you know the flim flam. You know it was shake and bake. Because why would you close above a level after news hit? It makes zero sense. Why would that become support? It wouldn't, right? So you know why it was done the way it was done. You want to watch stuff like this. You see it all the time, but if you see it the day of earnings, and it just happens to be like that, it is what it is, guys. But this is really important to get, really important concept. If you want to learn more concepts like this, let me know. I'm happy to go over it. You could just put on the tinfoil hat with me, but it does work. 2 other names. And before I get into it, guys, you're going to have to put on your big boy pants. There's no other way to say it. You're going to have extreme volatility. You can't be getting nervous if you're at 400 one day and you're at 418, 419 the other day because it broke out and it dropped $4 or $5. Okay? There's no other way to say it. There's not a nice way to say it. You're going to deal with extreme volatility. To see that extreme volatility, all you have to do is type in ATR, go to it, and you will see the extreme volatility. That's it. You're going to move, on average, 17 to 18 points. Just put an ATR on your screen, and then if you're not comfortable with that kind of range for the day, don't trade the name. But understand that the game has changed drastically ever since November. It's on. We're going to see increased volatility. On average, you might have had a move that would have been what? 10%? Half of that, right? On any given day? Maybe you could have seen 10% of that. Right? And like look at these bars. Now all of a sudden you're 2, 3, 4x that on any given day because you have to take this out and divide it by hourly. That's why I'm saying it the way that I am. But when you think about that, understand that. So size down or find another variable. There's no other way to say it. I had to get that out because it's been on my mind and I know you people are going to be dealing with it tomorrow. Okay, you have the NASDAQ possibly rebalancing. There's a name of a company that left one index to go to another index. Do you think that maybe they had a conversation with somebody before they did that? Right. Tomorrow at 12:13, there's rumors, Bloomberg is out there posting articles that PLTR is going to be added to the NASDAQ 100. You might want to watch that. Following the same rumor, MSTR has that similar rumor. You might want to watch this as well. The one thing that I would say about this that was troubling is that peak VWAP. You are fighting peak VWAP again, and you did reject there, making it a perfect short spot. So you're going to want to watch that 405 tomorrow. That is it.